Tesla on the daily chart, price is currently sitting in between a daily buys level at $240 and a key level at 280. Rivian, that is sitting at roughly 1950. In recent price action, price crashed below and closed below the daily buys level at $20. And that level now is serving as resistance. So which would you rather own, Tesla or Rivian? So as you know, Tesla has dominated the EV space for many years until recently, where you have a bunch of EV makers entering the space trying to carve out a name for themselves. One of which is Rivian. With its lineup of off-road capable EVs, the company has made a name for itself as it caters to the adventure-seeking consumer looking to explore outdoors. The hype surrounding Rivian led to its grabbing the most valuable IPO of 2021 at nearly $12 billion. Tesla has been producing vehicles for more than 20 years, while Rivian has only been in the business for half that time. Despite this, Rivian has made significant progress in scaling production and boosting sales. In the third quarter of 2022, Rivian manufactured a little less than 7,400 vehicles and delivered slightly over 6,500. Since then, those numbers have been rising to around 16.3 vehicles produced and 15.5 delivered in Q3 of this year, both showing an increase of over 120%. However, compared to Tesla's 435,000 vehicles delivered and 430,000 produced in the most recent quarter, Rivian still has a long way to go before it can even be considered a true challenger. Likely reflection of the growing demand for EVs, both companies recently notched new all-time highs in revenue. Rivian broke through the $1 billion mark for the first time in its history. It is an admirable achievement, yet it comes nowhere close to Tesla, which ranked in more than $21 billion from just its EVs in Q2 of this year. Adding to the disparity between the two, Tesla's perfection of the manufacturing process and ability to mitigate costs has helped it obtain some of the highest gross profit margins in the industry. So many years ago, when Tesla was trying to produce the Model 3 to get to economies of scales, they struggled. They struggled with trying to make a profit. But now they finally reached that mark. And Rivian's going through the same footsteps that Tesla had to go through many years ago. Even though Tesla's historical price cuts in the last year have made their presence felt, the company still boasts a healthy margin of 18%. Rivian, conversely, has yet to turn a profit, reporting a loss of nearly $33,000 per vehicle sold. Rivian's profit margin remains in the red at negative 37%. Again, it is worth noting that the company has been trending closer to profitability, as this number was as low as a negative 193% in 2022. Comparing Celsius to Rivian might be a little unfair at this point. You can compare Rivian to Tesla a la 2017, 2016. It would be similar to comparing an amateur boxer to a heavyweight champion. It is not even a competition. In every measurable aspect, Tesla outdoes Rivian. And then we haven't even talked about the autonomous vehicle that Tesla is going to get to before anybody else, a la the robo-taxi business. All right, so going back to the charts, bigger picture. This is Rivian on the weekly chart. Price is coming off short-term bottom at $18. Can price continue to fall? It could. Next support would be coming in at $15 level. and that might be a great opportunity to start scaling into the stock, as that was the origin of the strong move higher, which took price to $28. How high can we go over the medium term? After you clear the $28 level, look for a target at $40. Let's go back to Tesla. Now on the weekly chart, you can see this huge head and shoulder pattern, and the level at $300 has served as a major resistance level. However, you do have support, short-term support anyway, at the daily bias level at $240. However, you have these massive rejection wicks implying selling pressure, implying further declines. So it'll be interesting to see if this daily bias level at 240 can hold. It did hold once, however, price action did penetrate the level more than 100%. So if price breaches and closes below the 235 level, we could see price head down to test this pivot low. But I like this level at 200, which is the round hole psychological number. Again, if this zone is breached, then close below, you could find price slowing down at the 200-day moving average, roughly at 215. But again, I like the level at 200 better. Thanks for watching. Subscribe. Please like the video.